Hello everyone, welcome to the Economy Primer series of Drishti IAS. I am Ritu and today we are going to discuss very important topic of GS3, which is Monetary Policy Committee of India. So before moving to the points of discussion, first of all we will know that why we are discussing this topic. Since past 2-3 years this topic has become very important because economic situation of world is not going very well. The world is still in the phase of recovering pre-pandemic phase of economy. Meanwhile, we have these two wars, which is Russia-Ukraine war and second in Israel-Palestinian war. And we are also facing the downgrade of US economy. And because of all these cumulative circumstances, the economic condition of the whole world is in a downgrading condition. So that's why we are here to focus on the domestic economy, that how domestic economy should behave in such circumstances. So that's why we have chosen this topic. Moving to the points of discussion part. So first of all, we are going to discuss that why in discussion. So we will discuss the news related to it, and then what is monetary policy, and then what is monetary policy committee, policy stance of RBI, current stance of RBI, and then practice question for prelims and mains. So moving to the discussion part. So we have taken few cutouts from the newspapers. So the first cutout is RBI monetary policy highlights RBI MPC repo rate unchanged at 6.5%. RBI MPC minutes inflation ruling above tolerance band, monetary policy to remain disinflationary. RBI MCP to dial up hawkishness even as it holds policy steady. So what we can see here that various newspapers saying about the RBI monetary policy and how it is going to behave and how it is going to affect our economic condition. So that's why this topic is into the discussion. So moving to the next slide is about what is the monetary policy. So monetary policy is a policy of any central bank. So suppose that the Central Bank of India is RBI. So in case of India, it is a policy of RBI. So what it does that along with the monetary instrument, it tried to achieve the economic goals and whatever the goals specified in a particular act. So this is the monetary policy of any economy or monetary policy of RBI. And what is its primary objective? So its primary objective is to maintain the price stability in an economy along with the objective of growth. So this is the primary growth or primary objective of any monetary policy. And what it also does, so it also targets the inflation target, which is 4% plus minus 2. So it sets the inflation targets and which is reviewed by every 5 years. And it also discuss the repo rate and it also determine the repo rate. So what is this repo rate here? So repo rate is a rate at which the RBI lends money to other commercial bank. Similarly, we have the reverse repo rate. So reverse repo rate is the rate at which RBI borrows the monies from the other commercial bank. So what is the current repo rate of this country? So right now we have 6.50 repo rate. So this comes under the ambit of monetary policy. Moving to the next slide. Next slide is about monetary policy committee. So from where this term has been originated and from where it has come to as a legislative body. So its origin can be traced into 2016 when there was an amendment, and when this RBI has formed, so it was formed in 1934. So whenever we are discussing this monetary policy, so since 1934 we are discussing the monetary policy, but when it comes to legislation, it came into the 2016. So under section 45ZB, the amendment in 2016 RBI Act, the central government is empowered to constitute a 6-member monetary policy committee. So whatever the members we have, they are 6 in numbers. And what its objective? So its objective is to determine the policy rate required to achieve the inflation and growth of any economy. So this is its objective of the monetary policy committee, and its decisions are binding in nature. So here what are the composition we have? So we already know that there are 6 members of the committee and RBI is the ex officio chairperson of that committee. So right now who is the RBI governor and who is the ex officio chairperson of the monetary policy committee? You have to comment down. And then there is a deputy governor in charge of monetary policy, and after that we have an officer of the bank to be nominated by the central board, and then there will be the 3% to be nominated and to be appointed by the central government. So these are the composition for this Monetary Policy Committee. So what we can see here that here there is no involvement of just banks, here is also involvement of the central government. So here there are 3 persons who are appointed by the central government. So whatever the decision is taken by the Monetary Policy Committee, it is not solely determined by the RBI's person or the bank person, it is also determined by the central government persons. So moving ahead, so next point is monetary policy framework. So we already had discussed that in 2016 we have this legislative command over that. RBI has this legislative authority and its decisions are binding in nature to all over the banks. And what is its objective? So its objective is to determine the policy or repo rate based on the assessment of the macroeconomic situation of any country or of any economy. So this is the objective we have. And what are the reasons for the repo rate or any policy repo rate? So repo rate changes transmit through the money market to the entire financial system, and it also influences the aggregate demand of the whole financial system, and it also determines the inflation and growth target of any economy. So what we can see here that these are 3 things, they are very correlated in nature. The first is the repo rate or the policy rate, and they also influence the inflation and the growth target of any economy and overall the aggregate demand of any economy. So this is the monetary policy framework, and when it becomes that its decisions are binding in nature, so in 2016 there was an amendment, and through that amendment the RBI got this authority that its decisions are binding in nature, and it has a composition of 6 members. So moving ahead, the next slide is about policy stances of RBI. So many aspirants got this confusion that what is the stance of RBI. So here stance means the stand, and what is the opinion of RBI at this point of time. So the first among this is accommodative. So what happened under accommodative? That an accommodative stance means the central bank is prepared to expand the money supply to boost the economic growth. So there will be the more money supply in the economy, there will be the more economic growth in the any economy. So this is the accommodative stance, and what happened in this that it is willing to cut the interest rates. It means the central bank, which is RBI, is willing to cut the interest rates. It means that there will be the more money supply in an economy, and they will also support growth needs policy support, and inflation is not immediate concern. So when this kind of things has been taken, when RBI or any central bank take this kind of stance, when inflation is not the immediate concern. So right now, what is the stance of RBI we will also discuss, but right now we should know that inflation is an immediate concern, so we cannot have this accommodative stance. Coming to the neutral stance, so here in neutral you may be confused that RBI will not change any kind of policy, so it remains unchanged, but here neutral means that it can cut the policy rates and it can also increase the policy rates. So here neutral is different. And what happened that this stance is typically adopted when the policy priority is equal on both inflation and growth. It means that there should be the equal stance for the inflation and growth. So there should be no disequality or inequality between these 2 points. And the guidance indicates that the market can expect a rate action on either way at any point. So we already had discussed that there can be any kind of changes, either there can be the cut in the interest rate or there can be the increase in the interest rate. So this is called a neutral stance. Moving to the other stances, so other stances we have like hawkish stance. So recently we have used this term a lot, hawkish stance, that RBI is going to change its hawkish stance or hawkish tone in its economy. So what is this hawkish stance? So hawkish stance indicates that central bank top priority is to keep the inflation low. So right now the inflation target is 4.87%. So the October month, what it says that CPI data that the inflation rate has decreased 4 months low. So which is a very positive sign for any economy. And apart from this thing, the so many experts has also predicted that RBI is going to change its hawkish tone. So what happened in hawkish tone, that it is willing to hike interest rate to curb the money supply in the economy. So what happened in accommodative stance, that there will be the increase in money supply in an economy in order to achieve the economic boost in an economy. So here they will try to focus on reduce the demand and they will try to curb the money supply in an economy. And when this happen, that when RBI or any central bank take this kind of stance, when the central bank increases rates or tightens the monetary policy, so when the central bank decide that there should be the tightening of the monetary policy, so then they decide that there should be the curb in of the money supply in an economy, and to increase their rate of interest on loans. So they also increase their rate of interest on the loans so that they can decrease the number of borrowers in an economy. So this is the hawkish stance or hawkish tone, which is widely discussed in right now, because so many experts are saying that RBI is going to take the hawkish tone in an economy. Moving to the calibrated tightening. So calibrated tightening is different from the hawkish stance. It means that here there will be the rate hike, but there is no sudden rate hike. It means that if there will be the any meeting or committee meeting of RBI or any central bank, the suddenly they will not decide that on this point of date or on this point of time we will start doing rate hike in an economy. So they rate hike in an economy in a calibrated approach, in a calibrated manner. So it means that there will be the rate hike in an economy, but that should be in a calibrated manner, that should be in a measured manner. So that's why it is called as calibrated tightening. So it is also regarded as a tight monetary policy of any central bank. Moving to the next slide. Next slide is about current stance of RBI. So what is the current stance of RBI? So recently we had the fourth meeting by the RBI in month of the October. And what happened in the month of October, that RBI stance was unchanged, and it has not increased or decreased any its interest rate. It means that our repo rate is 6.50, so it remained unchanged. And why it remained unchanged? In order to control the inflationary measures or inflation target of any economy. So last time when we had this change in an inflation target, so in February 2023 RBI has raised the inflation target, which is 25 bps. So earlier it was 6.25% and right now we have 6.50%. And it is expected that in the month of December, when there will be another meeting by MPC, in that also RBI is not going to change its stance, and it's remain what you can say unchanged. And why it remains unchanged? Because RBI wants to have control on inflation, and right now we have hit the lowest inflation target, which is 4.87%. So RBI does not want any disruption in this kind of the data, and it wants to that there should be the control on the inflationary measures, and the food and fuel prices should not be increased. So in order to maintain the food and fuel prices, RBI is not going to change its stance, and it will remain unchanged. So, and so many experts had also said that it is also going to change its stance by hawkish tone. It means that it is going to tighten its monetary policy, but in future, in December, we will say that it will increase rate hike or not. So this is a matter of December, but right now RBI's stance is unchanged. So moving to the next slide. Next slide is about questions, and this question is already has been asked in prelims question 2020. So the question is, if the RBI decides to adopt a expansionist monetary policy, which of the following would it not do? And your options are: cut and optimize the statutory liquidity ratio, increase the marginal standing facility rate, cut the bank rate and repo rate. Select the correct answer using the code given below. So you have to answer this in the comment section. Moving to the mains practice question. So the mains question is: analyze the role of Reserve Bank of India in maintaining monetary stability and suggest ways to improve its effectiveness. So what you have to do, that you have to give brief intro about the RBI, that when RBI formulated, what is its main goal, and then how it maintains the monetary stability. So its main goal is to maintain the monetary stability, also to know that what is the price situation and also the credit inflow in an economy, the rupee stability, inflow of credit system. So these are the main job of the RBI. Coming to that, how it helps to maintain the monetary stability. So first, we have this monetary policy committee by the RBI. So with that committee, it tries to determine the policy rate or repo rate of in any economy. So it determines policy rates or repo rate It introduces various measures to control the inflation in an economy. It improves the credit system. So these are the instruments that RBI tries to control the monetary stability, and it tries to establish the monetary stability in an economy. Coming to that, how we can improve its effectiveness. So first we need to point out that what are the challenges we have. So RBI right now, whatever it takes the decision, it's in a very good position, and it always think about that there should be no much inflation in an economy, and it analyzes the situation that what are the macroeconomic and microeconomic situation of our country, and it takes decision accordingly. But what happens that there are loopholes in an RBI, and the first loophole is that despite of having several measures, it is unable to control the high inflation, and there are so many population who are affected by the high inflation. So it needs to have an effective measures to control the high inflation in an economy, and it should reach to the lower strata of the society. And then coming to the second point, that technological advancement. We do have many apps, we do have many technology which are very efficient and useful for any banking sector, but that are not reaching to the last portion of the society and to the last marginalized portion of the society. So there should be the better management of technological advancement. The functioning of the bank should be very efficient in that way. So these are the loopholes we have in the RBI's policy, and because of that we are not able to achieve our required goals. So in that way you can suggest that these things should be done by the RBI in order to control the inflation target, in order to have a good and sound economic growth in an economy. So that's it for today's lecture. If you have any query related to this lecture, kindly ask in the comment section. Thank you.